let's quickly look at the news that made headlines overnight. Well, the International Monetary Fund has cut the global GDP forecast by 10 basis points to 2.8% in its World Economic Outlook report for 2023. Now, this is on the back of interest rate hikes by the central banks around the world and the recent volatility in the financial markets. The international body also cut the GDP growth forecast for 2024 to 3%. Now, similarly, the committee slashes India's GDP growth forecast for 2025 financial year by 50 basis points to 6.3%. Listen in to an excerpt from the presser.
That pent-up demand, which from consumption that was informing our previous forecast, is therefore going to be less because they've already had more catching up before. So that's why there's the downward revision this year. Then we go up to 6.3 next year. Again, a very strong economy, which is necessary to allow India to continue to converge towards higher living standards and create those jobs that are necessary.
And let's move on and talk about New York Fed Chief John Williams, who said that the policymakers have lots to do to bring down the inflation. He further added that the March outlook of policymakers for one more interest rate hike this year, as well as followed by pauses. Now, reasonable starting place is what he called, though the path will depend on incoming economic data as well. Even as inflation shows signs of a cool-off, it continues to be well above the Fed's 2% goal. So that is the word coming in from John Williams.
And ahead of the World Bank meeting, U.S. Treasury Secretary Janet Yellen highlighted the recent data that said that the U.S. economy is holding up even as the Federal Reserve continues its battle against inflation. She says, and I quote, "The U.S. economy is obviously performing exceptionally well with continued solid job creation, inflation gradually moving down, robust consumer spending."
And all eyes on the much anticipated March inflation print from US, which is expected to slow both monthly and yearly. While the core reading is also expected to ease mildly on a month-on-month basis, the annual inflation dipped to 6% in the month of February from 6.4% in the month of January. Now, markets, the figures will actually set the Fed in motion and will be one of the key drivers for them to actually start deciding whether there'll be any furthermore rate cuts or rate actions coming in as well.
And the International Energy Agency has called OPEC Plus's production cut a risk for the global economy. The move, he says, will push up prices, leading to higher import bills. He also expects prices to move higher from current levels.
And US President Joe Biden has arrived in North Ireland's Belfast ahead of the 4-day historic tour. His visit marks the 25th anniversary of the Good Friday Agreement, a peace deal which helped end 30 years of violent conflict with Northern Ireland.
And social media platform Twitter has ceased to be an independent company. The platform is now a part of Musk's newly formed shell firm, X Corp. Now, in a court filing, Twitter disclosed that its assets have been merged with X Corp.
And Berkshire Hathaway's chairman and CEO Warren Buffett raised his stake in Japanese firms, signaling further increase in his holdings in future. The move sets select Japanese stocks to soar on the back of this news. These range from the likes of Mitsubishi Corp, Mitsui and Company, as well as Itochu, Marubeni Corporation, and some other names coming in as well. Now, Buffett has raised the stake in all these trading houses to 7.4%.
And well, with that,